All right. Hey, everyone. Sorry I'm running behind today. I know. These guys are going to be like, where is this guy? There he is, booty cheeks right here early today. All right. All right. All right. Yeah, I know. It's been a long, these daily videos that I do, man, they really take a bite out of my schedule. So it's hard for me. Like I was like even debating even if I should even do this stream today. But anyway, I'm trying to stick to my schedule, man. It's hard. But I apologize for running behind, man. I should have shifted this to 3:30 my time, but I figured let me see how quickly I can get this on. Anyway, I appreciate you guys being here. Thank you for joining me on the stream. So if you're new here, welcome. Every Monday I stream at around 3 p.m. Eastern time, something like that. And what we do here is we're going to go over the general charts, right? The general markets. We can look at ETFs and things like that for Bitcoin and Ethereum if you want. Otherwise I refer you to the other channel. The other channel, I'll put the link in this chat here. The other channel, here's the other channel. Hold on. Let me put it here. I'm going to type it in here. Just give me a second. I share it in every stream. This is the daily update channel. Okay, hold on. Let me just type it in. I can't see what I'm typing. All right. This should take you there. Let me see. Make sure I spell it correctly. Otherwise, okay, that looks right. Okay, so I'm going to put this link in the chat here. Okay, and you can go to this. This is the daily update channel. Now, I would appreciate feedback. A bunch of you guys gave me some good feedback on it, but any other feedback is great to hear. It's a daily update channel. So understand the point of that channel, it doesn't change much, right? So it's not really meant to be consumed in a serial way, meaning, you don't sit there and like wait for the next episode because it's basically for people that want a quick update. So it's meant more to attract views, not exactly subscribers. I know that may not make sense, but that's what I gather from it. So again, those are not my charts, but I agree with the charts make sense to me. I mean, if the charts were completely off, I'd be like, yeah, I'm not going to say this. But the charts make sense. It is biased though. All right. I mean, everything is geared toward this thing's going higher, but right now it is going higher. So, that's understand. That's the purpose of that. And I'm working with a team, so I'm not alone in that. What is the channel for people who want to see? Yeah, I'm working on that one, man. Trust me. Let me tell you, booty cheeks. The girl for people may not be able to see him. The girls are very hard. The car is easy. All I have to do is go to a rental facility, right? And I can get the car. The girls are not so easy. I got to pay them. I can't get a free one. I'm trying to get a free one, man. But they're all like, nah. That's how it is here in Jersey. It sucks. Especially if you look like me. It just doesn't work, man. I don't know. And I'm trying to be frugal here. You know what I mean? So yeah. So trust me, I'm working on it. I want to deliver that piece of content. Believe me, I want to deliver that. That'll look great for my Instagram, even though it'll be all fake. So anyway, going higher, but as a bounce or a tested all-time high. Yeah, Benjamin. All right, so we're going to talk about it. Hey, Hamid, good to see you guys. All right. So anyway, yeah. So check out my propaganda channel. I'm going to call it the propaganda channel, but it's and it's kind of meant to be funny too. I try to be funny with it. Benjamin, are we in a broader corrective wave too? Okay, so 50K. Yeah. All right. So yeah, good question. By the way, I usually go over the news real quick, but again, I haven't had a chance to look at the calendar. Today, it's just been, I know, no excuse, man. But so I don't know what the news looks like this week. We may have like a, second week. If this is second week, yeah, we may be looking at like, I don't know, there may be a CPI report in there. I'm not sure. I don't even know. I haven't looked, but I'm going to suggest you guys look because what you're looking for on the economic calendar is something like a CPI report. I don't think we had non-farm payrolls on Friday. Again, I'm off, man. The holidays really threw me off. So you're looking for non-farm payrolls. Usually CPI comes next, PPI, core PCE. These are the numbers you're looking for. Any Chairman Powell testimonies or anything like that? I don't think we have anything like that for a while from Powell. No Powell movements for a while, booty cheeks. No Powell movements. 7 to 8 FOMO. Okay, I'm not sure what you mean by that, Hamid. What does that mean? All right, so let's get into it. All right, so first, 15 MSCI. What is that? Is that an economic report? Are these economic reports? What's FOMO? Is that an economic report? I know what FOMO stands for, but I'm not sure what you're trying to tell us there. Anyway, all right. So let's get into it. Now, if you have questions about stocks or an ETF or something like that, just let me know in the chat. And also let me know if it's long or short, right? Like if you're interested in like let's say Microsoft. I'm interested in long Microsoft. Okay, then I could look at it from that perspective. Okay. What is that? Is FOMO like a stock or something? Economic. Okay. Oh, that's the economic calendar? Okay. Yeah, I'm not sure what that means. Oh, Federal Reserve meeting. That's how you describe a Federal Reserve meeting, FOMO? Okay. Oh, so we have a meeting this month? The 7th and the 8th? Really? That's like Wednesday. All right, I'll have to look into that. But anyway, that's the kind of stuff you have to pay attention to, right? The press conference, because that's where we can get range expansions. Now, we're going to begin here with the S&P, right? So this month, January is a very important month for the market. Excuse me. Okay, yeah, I know. I have to get on that economic calendar. I couldn't even look at it today. I was running so far behind that I couldn't even look at the economic calendar. So I have to depend on you guys. So I appreciate that. Thank you. So January is an important month for the market because however the month closes sets the tone often for the year. So this is why they call it the January effect. You have to pay attention to the small caps, right? The Russell 2000, because that's a big factor. If the Russell 2000 closes strong, that often means you're going to have a generally bullish year. Because why is that the case? Because if small caps are getting all the money, if they're attracting money, that means there's a lot of growth potential, right? And why would they even attract money? Lower interest rates. And that's what we're looking at this year, right? We're looking at lower interest rates. Now, we have this Venezuela situation, right? We now own Venezuela, everyone. Venice America. So anyway, no, I mean that situation is very interesting because that's an oil play, man. They sit on one of the largest oil reserve, I think, or something like that in the world. They're sitting on top of. So you better believe we're going to be extracting that oil, and our oil companies are going to be benefiting from that. And just in my opinion, and I could be wrong, but in my opinion, that's going to make the price of oil cheaper if we're going to bring more of that oil online, which they were unable to do previously, right? So if we have more oil coming to the market, thanks to tapping into that reserve, then that means cheaper energy prices generally. And if we have cheaper energy prices, then that's an argument for no inflation or lower inflation rate. They can easily make that argument. Trump will come out, we have no inflation, folks. No inflation. Make inflation great again. No inflation, right? That's what they're going to use that as an argument for. I suspect, right? And if that's the case, what do you think they're going to do? They're going to have the yes man at the Federal Reserve, the new yes man, chairman, whatever you want to call him. And he's going to be like, sure, we're going to cut rates. We have no inflation. We're going to cut rates. More. Cut rates. More rates. Like Christopher Walken. More cowbell. More rate cuts. That's what we're gonna have, man. All right, I know I'm in a Christopher Walken kind of mood today. All right. So anyway, if you don't know who he is, Google him. So now I looked at oil earlier, real quick, and oil was strong. Oil was actually going higher. So I was like, all right, I don't know. That maybe that's the reaction to the initial chaos. I don't know. Maybe they I don't know how that translates into oil. Why oil is going higher, and of course we see Bitcoin going higher too. So inflation doesn't matter, right? If the is more than any other expense, it means the stock market is going to have a bullish year. Well, again, I think that all that goes back to inflation, right? I mean, they want to it's their goal to pay back their debt with worthless dollars, right? Every government likes to do that. So that's one goal, and they seem to be on that goal, right? So we want worthless dollars. Not good for us, but good for the people that everyone else that runs a country. Good for them. Um, Worthless dollars, and then right, and then you have this situation where if you have worthless dollars, then everything that's priced in dollars has no choice but to go higher. So that's stock market, that's gold, that's Bitcoin, that's any type of hard asset, property, any type of hard asset, right? So this is just reiterated over and over again. So if we're going into an easy monetary policy environment, I just saw a report. Schwab came out, not Klaus Schwab, Charles Schwab came out and they basically said that they're expecting a more uh, easy monetary policy environment ahead. I mean, I could have told you that, but anyway, that's going to be good for Bitcoin and all that stuff, right? Savi, how are you? Savi from Brooklyn. How you liking your new mayor so far, Savi? You get any free buses yet? Any free buses in Brooklyn? Or you have to maybe just do Manhattan first. I don't know. Let me know. All right. Anyway, Savi from Brooklyn. He doesn't talk like that though. All right. Anyway, all right. Let's talk about the charts. All right. So I see. I have someone put a chart in the channel here. Cool. I'll get to that. All right. So, right. That's I know. Right. I got the wrong one, man. They all have the same name. What am I gonna do? All right. So anyway, you guys should know who he is. U.S. JOLTS job opening 7. Oh, okay. Well, okay, that's good. If that's coming out on Wednesday, the JOLTS report, then I wonder if Friday is non-farm payrolls. When the government was closed, they really messed up the schedule. So, all right, let's talk about charts. This is the S&P today. Check this out, right? This is the SPY. Look at this. So, strong day today, right? We're up 5 points at 688. We're coming off of a higher low. That's bullish, man. I don't know. There's nothing bearish about this. Like I said, this is an important month for the market. How this month closes out is going to be key. But look at this. So that's a key resistance on the S&P. This does not look like a bearish chart. All right. Now, look, of course, charts aren't everything. And some piece of news can come out of nowhere. There could be a change. The Federal Reserve may change their mind unexpectedly. I doubt that, but you know what I'm saying? Something can come along and change things. That's why we can't rely on charts alone. I was just explaining to someone yesterday, you can't, charts will never tell you where the market's going to be 6 months or a year from now. A chart will not tell you that because so many things can change. Fundamentals change, right? And charts are just a reflection of history. So charts are looking backward. You have to use charts on the short term, like 2 weeks out, 1 month out, can be helpful, especially if you're looking at very short term, like minute charts. Then you can get a sense of certain things, right? And you can anticipate certain type of reactions. But the further you look out, the more random it gets. Why? The more uncertain it gets, I should say. Why? Because unexpected events. No one expected that we were going to be running Venezuela by today. No one. I'm sure some people knew, right, that this was happening. Only those people know the future, right? Like your friend Booty Cheeks, Nancy Pelosi. I know you love her. Okay, she probably knew, although it doesn't matter. But you know what I'm saying. Those type of people, they know the future. We don't, and charts aren't going to tell us that either. So we need to understand where charts are good and where they're not good, where they're limited, and we have to consider as new information comes to the market, like the idea of all this new oil coming online. We have to price that in and put that into perspective ourselves. What does that mean for certain markets? What does that mean for the bond market? What does that mean? And you're going to see all this stuff argued and debated on Twitter or whatever. Okay, that's great. But we need to be able to draw our own conclusion. And it may be right, it may be wrong. The key is drawing the conclusion and then assessing risk based on that. And then decide, are we comfortable with that risk or not? right? That's the whole key to whether it's investing or you're looking for a trade or whatever, right? Now, so my point on S&P is this is bullish. This structure is bullish. That's a higher low. This thing is likely to make a higher high. That's just the way this looks, okay? That's the structure. So this could be the result of, if we have that FOMC that you're saying this week, that could be the result of that. It could be a result of non-farm payrolls or whatever. You know what I'm saying? Right, right, booty cheeks. So unemployment rate is January 9th. Okay, so that's Friday. Thanks, Hamid. So that's Friday. Okay, so apparently we have non-farm payrolls and an FOMC meeting this week. That's a lot of potential changes. That's a lot of Powell movements, Secretary. That's a lot of potential Powell movements. It's a big Powell movement. So, we could see something like this. That's obviously very bullish for stocks. So, how is this information even helpful? Well, if you're in stocks, especially if you're in an S&P stock or a highly correlated market stock, it's likely to go higher this week. And as long as this chart stays like this, the change, if we get some type of material change, we need to see a break of support. Look, we don't see breaks of support. Look at this, right? We had this support that was established here, right? We had the lower low there, but lower low only relative to this low, okay? Relative to this low over here, that was not a lower low. That was a range low. Do you see that? So that's important. Why? Because the integrity of the broader structure is still intact. This is a bullish trend. I don't know why people come out, bearish, blah, blah, blah. I don't know where they come up with that when there's nothing bearish going on here. Nothing. Not a thing, right? There's nothing bearish. We get some bearish movements, we get pullbacks, but there's nothing bearish. So this is a broader higher low. This is a minor higher low. We could call that a minor support. This is even more minor, but it's a higher low. We're not pushing lows. We're not pushing supports. We're not even testing them. So there's nothing but strength here. This could be a reflection of the weakening dollar. It could be a reflection of a few things. I don't think our stocks are magically growing by leaps and bounds. I don't think they are, right? I think this is just a function of our dollar is going to zero. So anyway, all right, just like we were talking about the Turkish lira, a few years ago, right? The Turkish lira was going vertical, U.S. dollar versus the lira. Why? Because the Turkish lira was going to zero, right? So the chart looked amazing, and it wasn't because their economy was growing. All right, let's move along. So this is the NASDAQ. This is the S&P. We'll take a quick look at the NASDAQ because it's the same generally. Now, notice it's not exactly the same. It's not exactly the same. It's similar, right? So the NASDAQ, it looks a little bit more, a little bit more range bound here, right? The NASDAQ is kind of stuck in the middle. Look at that. This thing was only up four and a half, a little over 4.5 points today. That's not amazing. You can just look at SPX Gold to see how the stock market has actually been doing. Okay, yeah, we can take a look at that. That's interesting. Because so that kind of shows us, I guess, through the eyes of inflation, would you say, Secretary? We'll take a look at that next. But so look, this NASDAQ chart is a consolidation. You can easily draw trend lines, right? I don't have to draw them, but you get what I'm saying. You could draw trend lines, then they converge, right? So that's a symmetrical triangle. It doesn't matter that it's a symmetrical triangle. What matters is it's consolidating. And when this breaks out, it is likely to be a powerful breakout because this triangle is a higher low, relatively speaking, right? So understand that. So why does that matter? Because you have a lot of volume accumulating in here, both long and short. And half of that volume, half of those participants are going to be wrong. So when this thing breaks out, they have to cover, they have to squeeze, and then you get all the new ones jumping in, right? So you get a squeeze. So this market is setting up to go higher, right? That's what we can tell from this chart. It's setting up to go higher. The bias is bullish. People that are bearish, I don't know what you're thinking, man. I don't know what you're thinking. All right. Giovanni, how are you? Come stai, as they say in Italian. So, tutto bene. I have my Italian. I talk to my Italian friend regularly, tutto bene, and he says a few Italian words. So it's I'll put it on the screen here. I'll put it on the screen. I typed it into the chat earlier. Let me find it. Hold on here, Giovanni. That's where you can find it. That's where you can find that's my propaganda channel. That's my alternative channel. Now, keep in mind, people, if you haven't seen that channel, it's not me being exactly serious. You know, this channel here, you used to me streaming when I stream. You used to me being serious and attempting to be professional and all that other stuff, right? Even with booty cheeks, right? We're trying to be professional here. But on that channel, I'm really off the wall. So it's not meant for people that are it's not meant for like a Bloomberg type of crowd or a more serious crowd. It's meant you'll see. You make your own assessment. But I'd love to hear your feedback. Okay. Anyway, from Mexico. Oh, you're from Mexico. Lo siento. I'm speaking to you in Italian. Lo siento. Lo siento. Mexico. Viva la Mexico. Viva el Mexico. ¿Cómo estás? ¿Cómo estás? I can speak Spanish. Hablo español, poquito. All right. Sorry about that. Sorry about the Italian. I saw Giovanni. I saw an Italian name. So Italiano. All right. Anyway. Yeah, I don't know. I don't know what you could call. I don't know what the other one. Forget it, man. So anyway, yeah. Yo sé palabras malas. Solamente. All right. So anyway, I know you guys throwing me off here. So these markets are poised to go higher. I wanted to say something, and now I'm thrown off. Let me go back. Hold on. I saw a comment, and I wanted to say something about it. I think it was booty cheeks. Oh, yeah. Gold and S&P. We have to take a look at that. What should happen for S&P to say it's bearish? So I said, Hamid, it's got to break supports, right? For these markets to argue that they're bearish or that there is some type of material bearish argument, we have to break supports. This is a support on the NASDAQ. Has to break. If that does not break, we are not bearish. It's that simple, right? The market makes the determination for us. We don't sit there and say, well, I think this, right? That's what all the morons on Twitter do all day. I think that. They're clowns. Actually, they know that they don't know. They're doing it to just monetize attention. That's what they do. It doesn't matter if they're right or wrong. It doesn't even matter what they say. What matters is they monetize attention, right? That's how they make money. So you have to make your own assessment and you let the market tell you. The market tells you. So the market will be telling us if it can break a support. As long as it does not do that, it's strong. So even though you had this situation like where the market pulled back a bit, you notice it went into a support. That was a clear support, which you could have anticipated based on this old resistance back here, right? That you could have said, okay, there's a potential support here. You could have anticipated that. You could have positioned yourself for that and perhaps taken an options position or maybe bought some stocks in that pullback or whatever, as long as the market held that level. If the market cleared the level, now you have a new situation on your hands. You have a new argument on your hands. But right now we don't have that. Right now everything seems to be bullish, okay? So let's see if we could take a look at this market. The S&P in terms of gold, as per Booty Cheeks' suggestion here. Let's see, can I do that? Can I do SPY against XAU? Let's see. Can I do that? They may have that here. XAU? Let me see. Do they have that? XAU. Can I do XAU? Can I do USD on here? Let's see. So if I look at SPY, right? That's the spider. That's this S&P 500 against gold, right? So this is the S&P 500. That's an interesting chart, isn't it? Let's look at the weekly. This is the S&P 500 in terms of gold, okay? Against the value of gold. Wow. Not exactly a bullish chart, is it? So what that tells us is it's losing its value, right? The S&P in terms of gold is actually very bearish. I mean, look at that. It looks horrible. Okay, that's a reflection of the dollar. That's what that is. That's a reflection of the dollar. Our dollars are becoming worthless. So that's an interesting perspective. Thank you for the suggestion, Booty Cheeks. And I'm working on the sports car. Still working on it. Can you say volume was low? Okay, so what is it going to go like a spring? All right, so hold on. I'm going to get to your questions here. They know, they don't know. They know, we know. They they know, we know, they know, they don't know. It's all yeah. I love that. They know, we know, they know. Okay? Booty Cheeks knows. We all don't know what we know, but we don't know. So, yeah, but it's true. Most of that stuff you see like on YouTube or whatever, TikTok, whatever, Instagram, it's to just capture your attention, and that's how they make money. Understand? It's hard to, if you think of it in terms of logic, it's very hard to understand. Like, why would someone want to be wrong? It doesn't matter. I could come on here and I could make all kinds of forecasts. It doesn't matter if I'm right or wrong. It doesn't matter. What matters is I'm getting your attention, right? That's and now me, I'm not making any money with that. You don't see any ads on my videos. You don't see me promoting any type of anything, right? I'm not making money. But the guys that are getting your attention and promoting whatever, okay, that's how it works. So anyway, all right, interesting chart. Let's move along here. Let's take a look at the bond market. Okay, ZN1, real quick, bond market. You guys should always pay attention to this. Like I saw a quick thing on Twitter yesterday, how is the bond market going to factor in the Venezuela situation? I mean, clearly there's no factoring in here. Look at this. Nothing, right? The bond market, 10-year note on the weekly. Boring. And what is this? This is gonna I can barely keep my eyes open here. What is this? Right? What is this? There's nothing going on here. So we're sitting here at this support. You see this? See this? Old resistance, new support. See that? So based on what we're seeing here in the bond, this is the bond prices, the market is attempting to hold, right? So if bond prices continue higher, rates are going lower. This is what everyone wants, right? Trump wants that. Everyone wants that except for Powell. Powell doesn't want that, but everyone else wants it though. So this looks like that agenda is being fulfilled. So far, we haven't broken the support. And this structure is generally bullish, even though the resistance stuck. Remember, this is a weekly time frame. The resistance stuck. It held up here. You see that? It's stuck. We're not breaking. We're not breaking supports. This is still bullish. So even though resistance holds, we're not breaking lows. That's bullish. That implies strength. Let's take a quick look at the US 10 yield, right? US 10 yield. Okay. This is the yield. This is the 10-year note yield. This is the interest rate. This doesn't exactly look bearish to me. Well, it's sort of mixed. Okay. We want the yields to go lower. They should be going lower. So it's all right. I'll take that back. It's mixed. It's mixed because we could argue that there's a triangle here, but look at this. That right there is an old support, new resistance. Okay, see that? And it's sticking. It's sticking. So as long as rates reject this level, right, that's what they should do. And bond prices should rise off of that support. This should go lower. That's what everyone wants to see. We should see rates testing lows. We should see rates breaking supports. That, if we see that, that's all very bullish. That's what we want to see throughout this month. That's what we want to see throughout the first quarter. So fundamental information that comes along should support this idea. If we get the opposite, we get some type of conflict or some type of surprise, and you see the change here and rates continue to rise, because remember, the 10-year note trades on its own, right? The government, the only way they can really affect this market is they have to go in and buy their own bonds, right? That's the only way they can do it. And they have to buy tons of them. So that's the only way that they can really move this market around. They can't really talk this market like they do with the short-term rates. So this market is harder to move, right? So if this market breaks higher, that's not good. So you can use this information to guide your own decision making, right? The bonds are really where the game begins. So, Hamid, I know you have a bunch of questions here, Hamid. JOLTS report and unemployment, right? So those are major, um, those are potential market moving events. Okay, FOMC will happen on 27th to 20. Oh, okay, Hamid. Thanks for the correction. Thank you. All right, I thought it was week count. That's a lot of information for 1 week. All right, no problem. I have to check that calendar myself, but no problem. So again, those are major market moving events. Those will shape what the future looks like, right? If there are any surprises. If there are no surprises and everything pretty much stays as expected, then the charts won't change, right? Those bullish trends that we saw in the S&P and NASDAQ will continue generally, right? This bond yield should go lower if nothing changes. But if there's a change in one of those events, which again, we don't know unless you have inside information, we don't know, right? So we have to see how those events come out, and then we have to see how the market reacts, and then we can draw new conclusions. We can see which side the argument strengthens or weakens on. Does that make sense? So hold on. Let me saw. I saw Giovanni here. Giovanni, let me go back here. Volume was low. Hold on. Okay, so yeah, volume, Giovanni. We were in, we're sort of still in holiday volume mode, right? Weeks 3 and 4 of December, and usually week 1 of January are typically holiday volume. Volume tends to be lower, right? So if we have that, it's very similar to the effect that we see in weeks 3 and 4 of August, where we have like the bottom of the volume, the lowest volume, right? It doesn't mean that the market doesn't move. It just means that moves are going to be muted. They may have less follow through. Breakouts are likely to fake out more, that kind of thing, right? So for example, let's jump to another chart here. Let's take a look at something like let's see. How about GBC? This is the, is it a GBC? No, that's not it. Hold on. What's the grayscale? No, that's G. Okay, so BTC, right? BTC is the, where's the grayscale one? The stock. I guess here's what I'm going to do. I'm going to do GBTC, right? This is the grayscale ETF, okay, of Bitcoin, right? So you could see like in these periods of lower volume, like we saw over the previous month, this type of price action, consolidations, failed breakouts, that kind of thing, failed to go one way or the other. That's typical. I mean, over the previous weeks, we had just one bear after another. Bitcoin going to 50K. It's not going to 50K, man. I mean, anything is possible. You have to keep an open mind. I'll be the first to tell you that. But the market is just not showing us any type of evidence that supports that. On top of that, all the fundamentals that are coming out. I mean, just watch my other channel. These news articles that they force me to read, like, I mean, I know they go out and they find biased, bullish arguments. I get that. But some of these things that they're doing, I'm like, man, you have to compare this to how things were like 10 years ago or 15 years ago. There was none of this activity going on. And now you have, Michael Saylor, I'm buying trillions of dollars, people. Right? You have that. I mean, he in the greater scheme of things, he's not like a major force, but you have things like the administration doing things. You have things like the SEC becoming very supportive, right? The SEC, that's a pretty big deal. You have all this other stuff, all these regulators and all these other things aligning that are in favor of Bitcoin. So I don't see how Bitcoin is going to have a bearish argument when you have like heavyweights like that aligning. They're on Bitcoin's side, right? So right now, look, this thing is, we're basically going up into that 95K area. This translates to 95K, right? Not on this chart, but this translates to 95K on Bitcoin, basically, right? And everyone was wrong. Everyone was calling for a pullback, right? Everyone was, oh, we're going to break 80K. This thing refuses to break. And now here we are attempting to break this high. If we break this resistance, if 95K is cleared and it's cleared with conviction, we're likely on our way on our next leg. So someone asked earlier about, is this wave 2? I think it was Benjamin. Is this wave 2 of Bitcoin? Well, you know what? It's this is a hard question to answer because you guys remember over the previous weeks, I talked about 88K. Remember that level? 88K was my wave one overlap. It was somewhere around here. I can't show the Bitcoin chart because of the other channel, but I could show it on here because this is the grayscale ETF. So I had like a wave one figured out, right? Top of wave one, or it was somewhere around here somewhere. Okay. And I said, if we overlap that, then we could that could confirm that we're in the broader wave two. We've barely overlapped it. We went below it like maybe a couple of days and then back above. And 88K was a pretty sticky point, if you guys notice, right? So, and now we're pushing back toward 95K. So what that tells me is we never went into wave two, right? What that if this sticks and we don't break that 80K, where we stay above 80K, if that sticks, then we're most likely in wave five, right? Because what I was saying was this was wave 4 of 5. This was wave 4, and now we're looking at 5 of 5 of a broader 5, right? Something like that, which can test, which in theory should test 126, right? Now, when can something like that happen? We're looking at a couple of months, right? First quarter, possibly second quarter, where we could be testing the high if everything stays intact, right? So I suspect we're not in wave 2. We're in wave 5, right? This could be the beginning of 5, right? So if this is wave 1 of 5 developing, or possibly wave 2 of 5, and we're about to go into wave 3, wave 3s are big wave expansion type of waves. So just something to keep in mind. I don't think we're in wave 2. If this is a wave 2, it was a very tight wave 2. So you say, well, what are you talking about? Well, when you zoom out here, you could see it on the big picture, right? You could see the wave counts on here the way I have them. This all the way back here, right? This was 2017 back here. That was wave 1, right? Then we have wave 2, right? Then we had this, like, I think this was part of wave 3, right? And then we had like this pullback here, which again, this thing reset the whole wave count, because this here, wave 3, right? Wave 4 should not overlap wave 1. So if this was a broader wave 1, that means that was overlap. So that really doesn't count then, right? Does it? So we have to start counting over again. That's generally what that means. So where does that put us here then? Well, now, so if we have basically, what is this? The wave 1 here, right? This wave here, 1, 2, 3, right? Broader 4, and then we're supposed to have like a 5, but then in that 5, where are we, right? In that 5, where are we? So if this was wave 5, let me use a square. It might be easier to see. If this is wave 5 right here, if that's wave 5, that structure, then where's the wave 1 of that 5, right? Was my question. And I calculated wave 1 was right there of the 5. And we're not, in order to call it an impulse wave, you can't overlap. But overlap is tricky because it's like we never really overlapped with conviction. This is why wave counts can really throw people off and be very confusing. So that's why you have to use some judgment with that. So it's very likely, and especially now, when we look at this in light of the fundamental horizon, the easy money, quantitative easing horizon that's in front of us, wave 5 of 5 looks more probable. All right, which means at minimum, test of 126. All right. So anyway, hi, Kai, how are you? No problem, Kai. I started behind today anyway. I started behind. All right, so I was calling for 2 million Bitcoin. You and Michael Saylor, you should get together with Michael Saylor and have a drink. Talk about how high, booty cheeks, do you think Bitcoin can go? I think it's going to go to a trillion, billion, fillion. How about you? I mean, only 200 million? Man, what are you, a bear? So anyway, yeah. So you guys get that? All right, let's move along. So that answers that wave two question. I don't think this is wave two, the broad wave two, right? We're in this 5 of 5, which would complete this entire thing, right? This entire structure at that point would be a complete wave one, and then broad wave two, possibly. Now, keep in mind, a wave two, while in theory can retrace 100% of wave one, that in theory it can do that. The probability of that, again, is going to be shaped by the fundamental horizon. So if everyone is all we're playing with ourselves to Bitcoin all day, and the governments are doing that, then I don't see how we're going to retrace 100%. Maybe 30%. Maybe we'll get a tighter retracement, 30%, something like that. That's typical. That could be a wave two, maybe 40%, something like that, right? Extreme, maybe 50%. But 50% of what? If Bitcoin goes to 150, what's 50%? Back to where we are now? You know what I mean? So just something to keep in mind. You can't get too caught up in those theories. You have to look at everything through the lens of the fundamental landscape, right? Especially when it comes to long-term, bigger picture and investment type of ideas. When we're talking about day trades, that's another story. Day trades, we could look at a 5-minute chart and come up with determinations, but that's for a 5-minute time frame, right? Understand? I want you to understand the contrast. All right, let's move along. Okay, so I'm missing some comments here. Hold on, let me see. Do I see all the comments? All right. You know who's not here? You know who's not here? Guess who's not here? Alex from Romania. I had to say that. Even though he's not here, I have to say Romania at least once in the stream. Romania! I got to save my voice. I still have to make my video for today for the other channel. I have to yell throughout the entire video. So my voice is weak. All right. So Romania! All right, wave 5 will finish the pullback. Well, so when we get 5 of 5, right? 5 of 5 theoretically should complete up here somewhere. That translates to over 126K. Although it could be 126, usually it makes a higher high, right? So I originally had figured 130, 132, 133, around there, right? But again, what's going to pull this market back? There has to be some sort of material catalyst. And the funny part is the pullback that we got here, the catalyst wasn't that strong. It was just people overreact, right? Because if you look at the fundamental backdrop, there's nothing but like bullish activity. So it's an unusual situation. That's why when you get pullbacks, when everything is basically bullish in the background, that's usually a buying opportunity. Okay. There's no such thing as Romania, Booty Cheek says. I like that. Don't tell that to Alex. He'll be like, then what country am I in again? Romania! So anyway, all right, let's move along. No more Romania. Romania! I just love saying that word. All right, let's move to all right, let's look at gold and oil. All right, so let's start with gold, XAU, USD. Gold real quick. I mean, gold is just nuts, man. All right. So let's go to the daily gold. I mean, weekly gold. What are we going to learn from weekly gold? Don't short it. That's all we're going to learn from this chart. Don't short it. So I've been trying to look at gold intraday. Man, gold is nuts. Gold is nuts. But I mean, look at this price action here. Just look at this. Old resistance, new support. You see that? That's not a coincidence. Okay? Let me take this comment off. You can't see all you see is my top of my bald head. All right. My question is, when will wave 1 start again? Oh, well, when after wave 2, if we get a wave 2, right? Because again, the question is what magnitude? Because I can find wave 1s all over the place, right? So a wave 1 on that magnitude, right? Usually there has to be a 5-wave completion followed by a corrective structure, which is typically 3 legs, 3 waves, not always, but typically, which are denoted in letters, right? A, B, C. And in A, B, C, they all have their 1 to 5, if there's impulses inside of A, B, C, right? And then once we have that corrective structure, then we're looking at the next impulse typically, right? And that's when you see your wave one again. So, but you could find them all over the place. Don't be confused by that, right? They're just fractals. So look at gold. I mean, so this is like when right it touched that support, and what gold is up 115 points today. I mean, man, this is nuts. Let's take a look at the daily time frame. Just don't short gold, man. Just buy it. Look at this. There's a higher low. When we got beat up on what was that? That was there was a report that caused gold to pull back like that. And man, that wasn't long, right? We're on our way back up. This is bullish. This is nothing but bullish. Higher low, we're likely to go for that higher high. If you day trade gold, I'd be looking for longs. There's nothing else to say about it. This is strong. Okay, I mean, this may have obviously has to do with the Venezuela situation. You say we are in a wave 5 of 5. Right. All right. So I'll go back to that. You know what, Haman? I'll go back to that to the chart in a moment. Let me just get back. Let me go through. So gold. There's nothing else to say about gold. Gold. You have your support at 42.80. Right. We're on our way back up. We're basically pushing the midpoint of this large candle right here. Okay. And I'd be anticipating by Friday or early next week testing the high here. All right. So great if you're selling puts on gold. Great if you're, long gold somehow. Gold is strong. I wouldn't be. This is why you can't be fooled by moves like this and say gold is in a bear market. People that say that, you just got to ignore them. Even here, gold pulled back a bit, not for long. Here, and if you notice here, right, I just want to point out one thing real quick. If you noticed, that was the reversal pattern on gold. See that little higher low situation? Look at this here. That's kind of the inverse of it. That's like a failed low, but that's exactly what you're looking for when you get these type of pullbacks, right? So instead of stepping in front of the market and saying, I'll just buy gold, which is very tricky, the confirmation comes in the form of the failed low or the higher low. Here you have the failed low, right? You're looking for that. You're anticipating that. And when that confirms, you can measure your risk, okay? How is it possible? Yeah. So, right, gold, it's not that gold is worth, right, doesn't get shinier, right? It's our dollar is going to zero real fast. That's what it is. And if we're in easy monetary policy environment, like we're going to be swimming in cheap money, then gold has no choice. The stock market also has no choice. Bitcoin also has no choice. Your house also has no choice. It's all going to go higher. It's because our dollar can't afford, cost more dollars. All right, that's inflation. Google it. Let's move along to oil. CL1. Now, oil, this kind of threw me off a bit because I suspected oil should be cheaper. The fact that we're going to now get more oil out of that location, right? Out of that Venezuela location. But oil is strong. Oil is up. I mean, this could have to do with the cheapening dollar. Oil is up over $1, right? That's a lot for oil in one day. So let's just look at the candle structures here, right? Look at this candle. So at one point, looks like oil tested this low. So maybe initially I was right. Like, oh yeah, right. We should have cheaper oil. But man, it wasn't there for long. These are daily candles here, right? So at one point during the day here, it attempted to make that lower low and reversed in everyone's face. And now we're pushing higher highs. This is an outside bar. Not only is it an outside bar, but it establishes a higher low. That's not a bearish structure, people. That's not bearish. This is bullish. So again, oil is very heavily affected by fundamental changes. I mean, you can have the Arab countries come out and say, "Oh, we're going to produce more oil now." They can come out of nowhere and just say that, right? And then you get pressure on oil again. So I don't know. If we're going by the charts, this is bullish. If you think about the fundamental situation where more oil should be coming online, I suspect that this should not go very far based on that idea. Now, does that play out that way? I don't know. We have to see. the charts, when you combine the charts and what's happening, the fundamental puzzle, when you combine them, they should give you a better idea, right? So right now, we can look at resistance levels. We are at a resistance level on oil. That is a resistance level, right? And it looks like we're not rejecting it. Looks like we may push through, right? So then you have to look at the next resistance level. It's around here somewhere. So what price is that? Let's see, 59.72. That's around $60. So if we get up to $60, that may be a good place. If you're an aggressive bear, that may be a good place to do that. Okay. If you're interested in shorts, that's the place to think about it. That's the place to look for confirmation. Not now. You have a minor resistance here. This would be more for day trades, the resistance that it's at right now. Does that make sense? So that's the whole point. These streams that I do, this is the information that you could take away from here is, oh, okay, I have some levels now where I can anticipate some type of behavior. Now I need to see if it confirms or not on the particular time frame that you're interested in. It could be, you may be a day trader. You may be looking at the 5-minute chart. You may be a swing trader. You may be looking at the 4-hour chart, right? Your risk on each chart is not going to be the same. So you need to understand that and formulate for that. But that's the whole point of this stream, is identifying these levels, doing this type of homework. You should be doing this on your own regularly, right? So Booty Cheek says, we have enough oil about keeping oil from other nations. Right, well, okay, well, that makes sense. That's interesting. That's interesting. So, I mean, but I would think, yeah, sure, we have enough oil. We have no problem with oil. But if we're pumping more oil, I mean, so if we're keeping it from other nations and we're forcing the price of oil higher for that reason, okay, that makes sense. But why would we want higher oil prices when we have an administration that's all about lower interest rates? I'm just thinking, because since energy is a big component of inflation, right? That's why when they look at the CPI report, they say, well, we exclude energy and food because those things don't count. Don't look at those things, because they're usually they're heavy weights of inflation, right? They're usually heavy components, food and energy. So if energy is cheap, right, and oil is a big piece of energy, right? If oil's at $30 a barrel or something like that, then they can argue, what inflation? Inflation is nothing. Cut rates, because they want to cut rates. And they could make a substantial argument and say, oh, we're cutting rates because we have a very low inflation rate and we need to cut rates. And we're going to put them at zero. And we're going to be swimming in cheap money, right? I'm just saying, that's my guess. It's just a guess. I'm not an economist. So anyway, all right. But good point, though. I like to have these. It's good to have these points of view in debates. This is where, ideas come from. For oil control, the oil price, and don't let rise so people don't feel inflation. He can make some inflation. Right. Well, Hamid, I mean, I'm thinking, first of all, there's a lot of money. There's a lot of money changing. And oil is always a big deal, man. Right. So we're there for the oil, I believe. We're not there for the plantains. Okay. We're not there for the platanos. We're there for the oil. So that guy was removed from his house in 3 hours. That guy was in New York. That guy was on his way to New York, okay, to go to court. That was fast. So anyway, yeah, it's big money, man. There's a lot of power going on there. So anyway, it was very interesting. Right, that's what I suspect, Hamid. That's exactly what I suspect. I mean, that's part of the deal, besides all the money that they're going to be putting in their pocket. And all of our oil companies here are going to benefit immensely, because they're going to go there and say, hey, we're going to get this thing going again, and we're going to get half. So they're going to be like, we're your new wife. We get half, because without us, you get no oil. So, oh, nice. On Friday, oh, wow. Kai, you knew something? Was there something going on? Were there unusual options activity in those stocks? I'm curious, because this little move occurred on Saturday, right? So what, were you in talks with Nancy Pelosi or something? Or maybe Barron? Maybe you're friends with Barron and he told you what's going to happen the next day? I'd love to know. All right, anyway, so that's the deal. But I that's what my belief is, that lower energy prices bolsters the argument for lower rates, and that's the agenda. That's one of the agendas. That's not the only one, but that's one of them. Certainly one of them. Okay. So okay, cool. Let's move on. So we saw that's oil. Excuse me. We looked at gold. All right. So let me go back. People had some requests, right? Let's take a quick look. Um, let's take a quick look here. I saw someone had some stocks. I think it was Benjamin. Let's see. Kai, it was clear to me that the U.S. will bring Venezuela back into its sphere. Ah, wow, Kai, that's interesting. Because I thought for sure you must have been talking to Barron or something, or maybe JD, someone someone in the administration. I don't know. He must know someone. Booty cheeks, he's got you beat, man. So anyway, all right, let's see. Let me go back. I saw a request for a stock here. All right, so let's go back and let me see what we have here. I'm just going back through the. I think I answered everyone else's question. If I missed your question, please put it back in the chat because there's a lot of chat here, and I can't. Sometimes I miss your question because I can't see them all. All right, let's go back. Let's go back. Hold on, my thing is stuck here. This stupid thing. There we go. All right, going back. I am looking for the stock request. Let's see here. Sometimes people bring up some good stocks. Here we go. Benjamin. It was Benjamin. OSCR long. Okay, we'll take a look. MAMOH long. All right, we'll start with OSCR. Now, OSCR long. Now, the stock thing is interesting because I think it was Alex from Romania who brought up Hood when we talked the previous week. And Hood looked very interesting. In fact, I haven't had a chance to buy any. I want to buy some Hood, which is again a play on Bitcoin. All right. So here's this is healthcare. Interesting. That's a nice looking chart. Let's look at the weekly. Okay, what's going on here? So all right. So this thing has been in a consolidation for quite some time. Check this out. This is pretty clear, right? This is the weekly chart. Going back a couple of years here. Look at that. That's a pretty clean consolidation, right? If we look at this in terms of wave count, 1, 2, this looks like a 3. This is typical wave 4. Yep, typical wave 4. Wave 4s can be consolidations. No overlap with wave 1. That's your wave 1 high. No overlap. So that's wave 4, right? So you're anticipating this could break out into a wave 5, right? This is nice looking. Now, that's the longer term view, right? Wave 5 would have to be a higher high. So it would have to be above this point, right? So that becomes a price objective. $23.80, so around $24, right? That becomes a price objective for you. So keep that number in mind. Now, we are at the lower part of the range, right? So we can draw a little rectangle here. This is the lower part of the range. You see this here? This is the low part of the range right here. There's a lot of touches of that area, right? Some people will argue there's order blocks in there and all that other stuff. They like to use that word, order block. That's a ICT word. All right, it's just another way of saying support or resistance, but they put all this drama behind it. The order block is the institution, and they place these gigantic orders, and then it goes back there, and then it turns around, and then it reverses. It's support or resistance. But if you use support or resistance, it's boring. So they like all the drama. So order block is dramatic. It's an order block. It's a block with orders in it. So anyway, all right, I just want to point that out because I have to use that word a lot on my other channel, order blocks. All right, so anyway, so the point is this. This is a nice looking stock. I wouldn't be in a hurry to buy this right now because you're in the midpoint of the range, right? That's pretty clear. Midpoints are highly random. So if you're looking to buy this stock, I would assume you're looking at investment long, right? I would imagine you're not gonna day trade this. You're probably not swing trade. I'm thinking more of an investment for something like this because this is a cheap stock. It's probably not a big mover. I mean, it's up $1.60 today, 10%. It's not bad. Well, it's a big move for today, right? Looks like it has some pretty wild moves in here. But I would, for a situation like this, right? It's a matter of risk. Lower risk is going to be inside of this support zone. So any retest of that, remember, this is a weekly. And we just opened up and this thing's up 10% for the week. So don't see, when you see stuff like this, it pops up on everyone's radar, right? And all the fake gurus come out, yeah, right? And they go nuts. And yeah, there is some momentum and you have a gap. Yes, okay, I see all that. I see it. But investing now is higher risk because it can easily turn. You're in the midpoint area, right? So if you buy it and you hope that the momentum continues, you're taking greater risk. Just understand that. And you need a plan to get out if you're wrong, if you decide to do that. The more conservative thing to do, if you're into waiting, would be for a retest of the gap area, right, which would be the low of this current candle, today's low, or any type of retest of the support area here, right, where all the order blocks are. The order blocks, right, where they are. You want to be looking for reversals in there, even if you get like a spinning top type of situation, right, in that zone. Does that make sense? That would make sense for a swing trade. Or, if you're looking to accumulate some shares, or if you're looking to like a bear put spread or something, I'm sorry, a bull put spread in that type of situation. Or if you want to buy calls out of the money calls or even in the money calls, in that type of situation. That makes sense. So the stock generally looks good. I don't know what their fundamental story is, but the stock generally looks good. I would just those would be your prime, your opportunity areas that I just described. All right, so thanks for pointing that out. And then you had MOH. Okay, let me just go back here. Trump renamed support. We're now supposed to call right order blocks, folks. Let's make order blocks great again. All right. Oh, Mister. Sure, we can take a look at Mister. Oh, okay, Kai, no problem. Kai, I thought maybe you had some inside information. All right, no, Kai is an outsider. That's all right, no problem. We're all outsiders here. No, Booty Cheeks. I think Booty Cheeks has an inside with Nancy Pelosi. I have a feeling he knows her. So, all right. Anyway, let's take a look here, Mister. Let's do Miss. Well, all right. So, let's jump, Benjamin. I usually do one per person, and I gotta wrap this up here because I'm over an hour. But let's take a look at Mister. MSTR, because we all know who owns Mr. It's no longer micro. It's now just strategy, right? Even though the stock is MSTR, it's called strategy because, because it's no longer micro. I'm a macro. I'm a macro player, okay? I'm packing macro, bro. So, all right. MicroStrategy, this thing is basically a high beta version of Bitcoin. That's how you have to think of this. So if Bitcoin gets hammered, this is going to get hammered more. If Bitcoin rallies, this is going to rally more. Now, this thing is stuck right now. Let's go to the daily time frame. This is the weekly, right? Like Bitcoin is doing well, pushing toward 95K. This thing should be doing better, right? But this thing has got like things that hold it back. And people are probably afraid because this thing is so wild. But what are we up? 7 points, 7.5 points at 164. So, I believe that this stock, it's not 1-to-1 with Bitcoin. So Bitcoin needs to move for a while. Like if Bitcoin starts pushing 100K, 105 or something like that, this thing will probably have legs again, right? But right now it's slow. I think this is if you're trying to bet on Bitcoin, but you want to use a stock as a proxy, I think this is a good stock for that. Right? It's wild though. It's a high beta stock, and it's got other problems. And Michael Saylor, he's all over the place, saying Bitcoin is going to be $1 trillion by next week. He says that like all day long. It doesn't matter where Bitcoin is. Bitcoin could be minus. Bitcoin could pull back, right? Have a 95% corrective move right off its high, and it'd be like, if you can't handle a 95% fluctuation in your account, then I highly recommend you buy bonds or something, or open up a savings account because you're a little girl. I mean, that's what he says. Anyway, my Michael Saylor impression. So this is a Bitcoin play. If you're going to buy this now, look, I like the price. I definitely like the area. Look at this. It may pull back a little further. I wanted to buy some of this MSTR. I haven't bought any yet. make more risk and buy more Coinbase shares. Yeah. All right. So let's talk about that because I bought Coinbase with the same idea, Giovanni. So MSTR was like the other one. It's just MSTR is higher beta. You could use MSTR if you have more of a risk tolerance. You have to adjust for that, right? Maybe use smaller shares or whatever. But I like this long. I definitely like it long because obviously I'm bullish Bitcoin. The confirmation, there's no confirmation yet, but the confirmation, of course, will be when you break this level here. Okay, which I'm very confident it will. Let's see, 190 area. Where's that? No, 200. 200. It can do that pretty easily, in my opinion, over the next few weeks. So if you can handle the risk, this thing can pull back 30 points on you easily as well. So understand that. That's the risk. Right, Hamid. So let's take a look at Coinbase real quick, and then I want to jump to you know, uh, Hood because they're all in the same boat. Look at Coinbase. I own some Coinbase, very little, 255. We're up 17 points today. Wow. I only have like 2 shares. Doesn't matter. But my average price is like 245, I think. I'm trying to buy 1 share at a time. What's the low here? You're joking. 225 was the low. I have an order sitting at 220. Oh man. All right. See, Hamid, you're right. I'm wearing I got to take off my dress and I have to put on my big boy pants. I have to remove the dress, remove the panties, and yeah, look at this thing. Wow. So anyway, and look at this double bottom, double bottom. Look at that. Nice failed low situation. Look at that. Beautiful. That's a beautiful setup. And look where we are now. This is called a kicker pattern, by the way. When you have candles that look like this, especially with a gap, that's called a kicker pattern. So that's very bullish and that's very high momentum. So this is much more responsive to Bitcoin, as you can see, right? MSTR needs some time to get going. This one is a better play. And look, this thing can easily get back. What is this? 276. My price objective on Coinbase was 300, right? And that was back here when it was pulling back. So I think if Bitcoin stays stable and Bitcoin keeps going, you're likely to see this leg. This could be that broader leg, and I'm going to try to buy more, maybe more than 1 share at a time. Maybe I'll buy 2 shares. I was trying to accumulate a position of like 10 shares on the pullback, but as you can see, it looks like it's done pulling back. Right? We have a double bottom now, and we have a Bitcoin. And on top of all that, we have a fundamental environment that's very positive for these stocks, right? And we know how Coinbase rips everyone off with their ridiculous fees. So obviously they make a lot of money. Let's take a look at Hood, right? Robinhood, because this is the same idea. Look at this, same deal, right? Now, what I like about Robinhood, and Alex from Romania pointed this out a week ago, it's a much stronger looking stock in general. I mean, look at this. Look at the structure. Look at the trend, right? Look at this range. That's a broad higher low consolidation. That's what that is. So, and now look, it's breaking out of it. Look at this. Look at that support right there. Look at the failed low, just like Coinbase, right? Look at that. It's all the same play. It's all the same trade. So you just have to decide what separates these stocks. Obviously, I mean, Coinbase and Hood are basically in the same business, except Hood can do stocks and options and stuff like that, right? And Coinbase can't. They're all in the same business. So it's the same idea. It's the same play. It's just one stock is going to have a greater beta than the other, or they're not going to have the same beta, which is how much they can move, right? You could measure risk from that. So you have to decide which one is better. I like Hood better, actually, and I want to start buying some Hood. Look, this thing is starting. It's at its resistance, the minor resistance, and look at this candle. So this thing is likely to break. I want to be long Robinhood. So I'm going to attempt to buy some tomorrow, even on the breakout, right? Because again, in a situation like this, so what am I going to do? I'm not going to buy a lot of shares, maybe 1 or 2. That's it, right? Because what I want to do is I want to accumulate on any pullback. So if we get some type of pullback, I'll look to try to accumulate more. The thing is, I have to have an objective, a position size objective. Something like Robinhood, how much is this thing? $123. So maybe if I can accumulate something like this, maybe 30, 40 shares, maybe something like that. No, I'm not going to do 100 shares. Let's say something, let's say less than 50 shares. Then I have to figure out how am I going to accumulate that, right? I don't want to buy it all at one price, right? Same with Coinbase, right? But I could be, Hamid's right. Hamid's got to kick me in the ass a little bit. I could be a little more aggressive with Coinbase. So, right. Well, you're right. Exactly right. I mean, he's been behind this. I mean, he's going to push these. He's going to push Bitcoin. We have an administration that's going to pump those coins. So you have all of that on your side, on top of easy money on the horizon. So this is why you have to recognize that now, and you have to position yourself now, not when Bitcoin's pushing 126. You have to do it now, at least this month, right? Start positioning if you're thinking longer term investing, because we're getting the setup now. Understand, these setups don't come around very often. So you have to be decisive, even if it's a smaller position. Maybe you're timid, maybe you don't have the money, right? So you have to go smaller, but you have to make the decision, and you have to position yourself now, and to take advantage of this opportunity, because when it's pushing the highs, you're going to sit there and you're going to say to me, oh, because you buy it now. No, 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 not when it's pushing. That's when you should be taking your profits and selling it to all the morons that aren't buying it now. And you guys know, I'm not one of these big mouths telling you to buy every 5 seconds. You know, most of the time I'm like, wait, don't buy this thing. Risk is too high. I'll say that for 6 months, right? You guys, all summer, I was like, stay away from this thing. Stay away from Bitcoin over 100K. Right? I said that, and people criticize, I never make money if I listen to you. Yeah, but then you have to take all the pain. All right, so have fun taking the pain. Now is when you be accumulating. Now. I've been saying it since since the 80K hold, and we've been pushing back above 85K. I've been saying it. Now is the time to be considering that. Now is the time to accumulate. Make sense? Right, Hamid. Now. And you guys know, I don't do that. I'm not one of these clowns. I'm not going to repeat myself a million times. All right. We will see you with Romania girl soon. Romania girl? Hamid, why girl Romania? I bet you they're friendlier there, though. I bet you if I went to Romania, it would be a lot easier for me to find a girlfriend than here in New Jersey. Dude, New Jersey sucks, man. It sucks. Well, I don't know. Even New York City is better. Okay, you would think that New York City, they'd be harder to deal with. No, they're actually a little easier to deal with for some reason. I don't know what the story is with New Jersey. I don't know what happened. But anyway, I don't know why Romania. I'd tell you, the girls there are probably more fun. So I'll have to ask Alex. He's married though, so I don't know if he'd be able to tell me. But he could probably tell me from his younger days, when he was single. He could probably tell me, give me an idea of what it's like in Romania. All right, don't get me started with Romania. All right, so you guys understand? All right, I got to wrap this up, man. If I missed your question, I apologize. Or if you wanted to see a stock or something. I know I couldn't get to MOH. I got to wrap this up. Benjamin, ask me next week, but I got OSCR. Thank you for that question. So look, I'm going to leave you with this. This month is important, and it often sets the tone for the market, generally for the year, right? The January effect. Look that up. And you can spot that usually with the small caps often lead the way. So that's IWM or Russell 2000. They often lead the way. And fundamentally, that all aligns because we are going into an easy money environment. That all seems to be clear, right? We see the reiteration of this over and over again. And we're going to get a new Fed chairman and all that other stuff. All right, no problem, Benjamin. So again, I'll do MOH next time. Thank you for asking. So just understand, if that's the general backdrop of our environment, then it's only going to be supportive for the markets. Our job is to just identify points where we can take risk and then decide if we want to take the risk or not. And I think right now, generally speaking, this is a good time to take risk. Something can change. That's why it's risk. Something can go wrong. We can lose money, but comparatively speaking, you're better off taking risk now than when Bitcoin's pushing 126K or 100K or whatever. You get what I'm saying? All right, Secretary, thanks. I appreciate that. All right. I think too, this is an important month, but I want to see a full month. Right, right. And you know what, Kai, what Kai says here makes sense. You know, what I'm saying right now is extremely optimistic and I'd say, I'll admit, it's aggressive. You know, we just started the month, but it's a good start. And you want to start making assessments, maybe wait half the month, 15 days in. But Kai wants to be more conservative and see the full month. He wants to see the monthly close. Okay, no problem. That's more conservative. You know, that's cool. But I just want to point out that this is the time. Use this month wisely. Use this month to assess your risk, figure out what you want to invest in, if you want to invest in something or whatever. But don't sit on the sidelines and be, I don't know. When things look ugly, and things aren't even looking ugly right now, they're looking better. When things look ugly, that's when you want to pay the closest attention, not when things look great, right? Not when things are all up at their highs and everyone is having a party in their pants and you're like, oh, I better buy now because I missed. No, now. All right, you guys get the message. Okay, guys, so thank you for coming to my stream. I really appreciate it and all that stuff. Thank you for watching. Make sure you check out my other channel. I still have to make my video for today. Okay, you guys may say, oh, but you made a video early. No, that video was, I was up till 4 a.m. putting that previous video together. Now I got to make today's video, which will be published tomorrow. All right, guys. So make sure you check that out, right? Mark's Market. I put the link in the chat earlier, and let me know what you think. All right, guys. So enjoy the rest of your day, the rest of your evening, wherever you're in the world, and thank you very much for watching.